Good morning, everybody. We have a new week of trading, a full week this time, and I'm super excited. Hopefully, we all do great this week, guys. I tell you this, ever since we hit that bottom back on April 19th, the market has been in an uptrend, as you guys can see here. Since April 19th, there was a couple of instances where the market will have two red days in a row, and then the dip buyers, they try to step up and buy something, try to give it a bounce. It didn't always work. Let me show you what I mean. So you guys can see here back on April 30th and May 1st, we had two red days in a row. Three red candles, but two red days. Because this red candle right here on April 29th was actually a higher close to April 26th. So we look at these two candles where the market actually closed lower. Two red days in a row, then what happened? Boom. The third day, dip buyers stepped up. We had another instance where we did have two red days in a row. We can see here back on mid-May when we were chopping, we had two red days. May 22nd, we had a lower close, and then May 23rd, we had an even lower close, and then on the third day, the dip buyers try to step up. Okay, now one instance, it led to a new all-time high. The other one was just a dead cat bounce. However, what do they have in common? The third day, the bulls tried, keyword is tried, to buy, and they try to step up. We had another instance recently where May 29th, we had a lower close. You guys see how this candle closed lower than the previous day candle. And then some continuation May 30th, where we close lower. Now, some people who tries to predict the market say, hey, on the third day, dip buyers are likely to step up. But here's why uncles say don't predict the market. Don't try to predict the market and look to react. Because you look at Friday's price action, you had a lot of people, or some people saying, hey, bulls might buy. It's the third day, two red days in a row. The third day, they usually buy. But look what happened. We dropped. Anyone who tried to predict the market saying the bulls were going to step up probably got cooked around this time. Okay? All we had to do was react to the price action. There was no need to predict. I had a 523 level. We broke down 523 after rejected for 524.6. That's a fib level. And it led to a beautiful move to the downside going as low as 518.3ish. Almost hit my 518 level. And then what happened? And then what happened from there? Recaptured 519.5, recaptured 521, and squeeze. Now, whoever tried to predict saying the bulls were going to step up on the third day, technically, they were right. However, if they try to trade their prediction, it's likely that they got cooked. They got smashed. And once they were all ready to give up on their little prediction, that's when the market makers made their move and squeezed. Now, was this just shorts covering, or was this legitimate dip buyers stepping up? Well, only the price action can answer that. The most important thing I'm trying to tell you guys is look to react. There's no need to try to use a crystal ball and try to predict the future. Look to react. We trade in the presence. Okay? So as of right now, we gapped up. If this is one of those dip buying situation very similar to May 2nd, then resistance must clear. Continuation must be shown. We're around 527.9, which makes support level of 527.3. You guys remember 527.3, let me change it to green, was a critical level, the critical buy zone when we was chopping back on mid-May. And then it became resistant back in late May, which helped lead to some downside. Okay, so once again, we're above this level, and it is support. If it defends us as support, 527.3. If it defends, guys, that's a bullish sign, but it will need to clear 529 for bullish follow through to trigger longs. Put in 530.3, 531.5, and new all-time highs in play. Okay, above 527.3, bulls could have a shot at more upside. But if they break down 527.3, That will put 526 or lower back in play. And if 526 and 524.6 break down, it's likely this gap up was just a dead cat bounce. Okay, this was just shorts covering, and we're likely heading down lower. Okay, so above 527.3, stay bullish. The clear in the 529 will be bullish follow through. We break down or get below 527.3, bearish follow through would be to break down 526 and 524.6. Remember, on a daily chart, we also have a daily chart false breakdown setup. We broke down 524.6 and then we recaptured the next day. So the levels that bears really need a breakdown to be bullish, to be bearish on the daily chart is 524.6. Here's triple Q. Let me go to the bigger time frame. Okay, so it's around 453 right now. Let me show you guys how I get my fib level. So I identified the previous pivot high and then identified the pivot low right now down there. And then I try to get the coordinates right. So this was 449.3 to 34. And this low right here from April 19th was 413.07. All right, so we get the coordinates correct. And now we got some support levels based on the fibs. So as you guys know, 449.3 is a critical level. All right, it's around 443.53 right now. Let's get some more fib levels. So we got fib levels from the bigger trend. Now we get a smaller, some more minor fib levels, but they're still fib levels. Right there, you bring it to that all-time high, and then you bring it down to the previous low. We'll change the color to yellow. Get the coordinates right. 460.58 was the high. That was the high for May 23rd, and the low for May 31st was 443.06. All right, so now we got some shorter term fib levels. All right, so what do we have here? We have 451.7, okay, and then we got 453.89. We can round it to 454. So next resistance is at 454 fib level. If that clears, we get some more upside. The dip buyers that stepped up last Friday, they're showing follow through. 454 clears, look to long with 455 and 456.8 in play, possibly higher. Now support's at 451.8. That's a fib level. If that level fails, then 451, 449.3 would be in play with 447 below that, guys. I would be bear bias below 449.3. Here's Tesla. It's been chopping and consolidating. All right. Once again, supports at 178 and 176. I need to see a daily chart close below 176 to be bearish and favor more downside. 174.5, 173 or lower. But if we are to move to the upside, then 180, 183, or 184.7 all must clear. Those levels clear, especially above 184.7. I'd favor a bottom is in, okay? Here is NVDA. So similar to triple Q, we're going to find some fib levels here. Bring it to that pivot high. Bring it down to this pivot low. Get some shorter term fib levels. 1158.11. That's the pivot high. And then we got to get this pivot low right here, which the low is at 1,069.42. Okay, so now we got some fib levels for the shorter term. 1124 is a support level. 1124 is a support level. That level must break down. That level breaks down. Look to short. We could possibly go test 1120, 1118.7-ish or lower. Okay. Now, if we're above 1124, bulls have a shot at more upside, but follow through must be shown as usual. 1127, 1129 are resistant levels. All right, those levels clear. We could possibly pop up to 1134 or higher, maybe all the way up to 1139. All right, either way, follow the price action. Use the pivot levels that I gave you, or use your own pivot levels. But either way, let the price action guide you. All right, look to react. Peace.